Gold has certainly been a great performer over the past few months. Um, you can argue that it's been a wonderful portfolio hedge, but quite frankly, to what end? Gold, your portfolio, depending on what you've been invested in, for the most part, has done pretty well over the period that gold's also rallied. Part of this is the nature of gold. Um, it is viewed as a portfolio hedge, as a non-correlating asset, as an anti-dollar. There's a whole different bunch of ways you can look at it. But the bottom line is, if you're in a developed market like the U.S., there's an there's an opportunity cost to owning gold. You, if you buy gold, which is a non-interest bearing asset, you're foregoing the interest that you would receive on risk-free rate of return of your money, through, in either Treasury notes or an FDIC-insured bank account, et cetera. Um, as interest rates come down, the opportunity cost of owning gold, or again any sort of non-interest bearing product, decrease. Right, you're not foregoing as much if you move your money into gold as you would, let's say, if interest rates were 5 or 6%. You've really got to question whether gold is going to be an expensive hedge or not when you could just earn 5% on your money for doing nothing. But in an environment where you're likely to earn, just over a percent on any of your risk-free assets, um, gold is not an expensive thing to buy as a hedge. So as a result, it got some upward momentum. I do think commodities always follow momentum trends, and gold is no exception. And so I think momentum buyers jumped on. I think also people, as the markets got a little loftier, people started to try to diversify into other asset classes, a little bit out of stocks and out of bonds. Um, just a little bit of vertigo, not because of any real obvious threat on the horizon. This is pre-virus, of course, but you basically had gold in a nice uptrend, and commodity traders love trending markets, and gold was certainly one of them. I recently looked at the divergence between gold and silver, and they're pretty much at among the widest levels that they've been apart for some period of time. Gold's outperformed silver by roughly 20% over the last couple of years. Um, those gaps tend to get retraced. I'm never a huge fan of saying, oh, that gold and silver have diverged and therefore they have to come back. Nothing says they have to come back, but over time they do tend to work. They do tend to work together, and you'd have to start to think, if gold is running its course. Um, Silver's got other reasons for underperformance. It's largely industrial. One interesting feature in this virus-aware market is that silver's got antimicrobial properties. It wouldn't surprise me to see silver crop up in a wide range of products where you never thought of it before, just because people sort of rush to incorporate antimicrobial stuff in. But that's not going to happen immediately. If it does, unless it becomes a mental fad, not an industrial fad. But you start to see the divergence between silver and gold, and I would like to wonder when that comes back. Because right now, what exactly are you hedging with gold? Again, this is if you're thinking from a developed country point of view. If you're in a country that has to borrow money in another currency, then gold is a much more appropriate hedge, because it's a hard asset in a place where they're relatively scarce. But if you're in a place that essentially can print its own money, what is gold buying you? I guess it's an inflation hedge. It's classically an inflation hedge, but there isn't much inflation. It's a decorrelating asset, but that's only to some extent, because actually gold has gone up pretty much in lockstep with every other financial asset that you could buy. So I'm not in love with gold right now. It's hard to say that's a short. I would maybe look to think about how it stacks up on a relative value point of view. But I'm not super in love with gold at these prices. Um, and at this point, I can't even really say it's cheap, because although the cost of ownership from an opportunity cost is very low, it's expensive. It's over $1,500 an ounce as we're doing this, and um, that's relatively lofty, and you got to take that kind of valuation into consideration.